morning, everyone. Welcome to the Stock Market Morning Prep video for Friday, August 7th. Well, it's all about the job numbers. Non-farm payroll numbers are coming out in about 45 minutes or so. Let's see what they say. Analysts are expecting a little bit stronger jobs. And, we look at, the trend. If we get under 200,000, like a real bad number, I actually think the markets are going to rally pretty hard. Maybe that meaning that they may put the interest rate hike on hold from September, maybe pushing it back to even December or even 2016. That might rally the markets. But if we do get a better number or a stronger number, I do think that the markets will probably start to sell off again. But again, it's not what I think or any analyst thinks. It's how the markets react to the numbers. So please make sure you understand that. Very, very important. Okay, so we had a couple of down days. We had some markets, some of the markets that we're looking at kind of pushed lower. Crude oil continuing to make new lows. I'm liking that better and better at the 42-ish area. I mean, we are right now trading at 44.50-ish. If we can break that and really flush hard into the 42 area, that would entice me to start looking at some of the producers, the exploration stocks. Some of the handful of stocks that I like is the SLB, NOV, EOG, Baker Hughes, BHI. Then you can go right for the crude oil play. You can trade the USO, but I like some of the individual stocks that have really been cut in half because of this sell-off in crude. So that's something I'm going to be keeping an eye on. Gold as well, breaking 1,000. If it can break 1,000, that's going to entice me to look for some sort of a buy area. Remember, gold seasonality is coming into some strength between now and the probably middle of October. So I'm looking for any big spikes lower in gold. And other than that, we have the same old, grinding higher, pushing lower, algorithms running the buy stops and the sell stops and coming right back to where we were, 2100 area. Right now we're trading at 2075, but does not surprise me that we go high. Remember, we were looking for some weakness, right? So now that we have the first week of August kind of out of the way, I'm looking for some grinding, slow grind, slow trade, and the path of least resistance is up. Okay, remember that. When we have a quiet market, you never want to short a dull market. So I think we get a little bit of a rally, maybe a grind, and then we get that capitulatory top that I'm looking for sometime September, even October at the very latest. But I'm really looking for September when everybody comes back. Everybody's looking to start buying stocks again, and that's that's what I'm looking for, that big push higher. Let's take a look at the indexes. Some of the indicators before we go to the index. Now, as you all know, guys who follow me, McClellan Oscillator, I put that up many times. Haven't showed it to you much this year. Why? Because we've literally just been in a range here. You can see this. We've been in a range. Anywhere below 50 or above 50 is where I'm really looking for some interest. Now, we had a couple times where we marked some sort of a bottom. You could see that here. And if you looked at a daily chart of the spiders, that's really where the low came in pretty much all of 2015. Okay, same really here up top, but we had that little spike higher where I thought, okay, well, this is where maybe the market may sell off, and I had called that several weeks back, and I said, listen, I think maybe we might be headed for a little lower prices, and sure enough, we did get that. Every time the McClellan Oscillator breaks out of a Bollinger Band and closes back in, usually is that sell signal or buy signal, depending on what side it's on, okay? But right now, neutral, so this is not telling us anything, meaning that we can move much lower, or if the market decides to move higher, we can get much higher before we even read any type of overbought reading here, which would be above 60, 70, and 80-ish, okay? As you can see, the RSI is basically neutral. All right, so that's telling me that we definitely could move at any given moment either way with plenty of room, okay? Now, let's take a look at stocks above the 200-day moving average. This is not a pretty chart if you're a bull. Apologize. Lower lows and lower highs. We have bearish symmetry here. We're below the 50 in that 200-day moving average. Not looking too good. However, we are kind of bottoming here on the MACD, so that could actually tell us that we do have some divergence where what the indicator is doing versus what the MACD is doing. Okay, but we are neutral here, kind of rolling a little bit lower in the RSI. Very slow trade is going to produce this. At any given moment, we can actually push higher and break back above. So, but again, stocks above the 200-day moving average, stocks are selling off below it. Not a good sign in the medium-term picture. Okay, stocks above the 50-day moving average, kind of sitting there. We did have a big dip lower, but we're really just kind of sitting there, not doing much. Again, neutral in the indicators. MACD is kind of rising a little bit, but I want to see this either really wash out, spike lower, or either push this market higher and really get us an overbought reading. Now, if we get an overbought and or an oversold reading in the three of these indicators that I've shown you, that usually within a few days kind of mark a top. So that's something that I'm going to be looking for. Okay. Now let's take a look at the indicators. The indexes. Spiders, as you can see, above the 200, and really this channel here, we've been in it since January, and it's just all noise. We haven't gone anywhere. As you can see here, we're really neutral in all of the momentum indicators. Volume is just a little bit below average, but we haven't gone anywhere, guys. You can see here. Okay, take a look at the Russell. Now, the Russell is a little bit of a different story. We're starting to make lower lows and lower highs. That's given us bearish symmetry. So that's something that is a big concern as well, because it is a leader, right? It's a leader here. It's one of our leaders. It's at least our secondary leader, and we definitely don't want to see our leaders starting to break down here. So this is lower lows and lower highs, not really a good picture here. Okay, and we broke below the 200-day moving average yet again. When that does happen, usually we get a flush and we look for lower prices. And that may happen here. That may happen, and we start getting into this actionable area here, this supply zone demand in the area of 116, 115, call it 118-ish. And this is something that I'm going to be watching in the coming days. Friday, when we get today, we have Friday. It's in the middle of the summer. I wouldn't expect much, even if we do get some erratic behavior as far as price action concerned. I would take a grain of salt and wait till we get back Monday, Tuesday, because this is the dead of the summer, and we're going to have some violent price movement. Okay, and that's why I said also, you know, if you have a couple of good trades in for the day and it's Friday, call it a day, shut the computers off, go play golf. It's the best thing to do, especially on the summer months. Here's the transports. Tagged the 200 like we said it would, and then now we're back on this area, this support area here, which is a decent sign. We did break this bearish symmetry like I mentioned earlier in the week, but now we need to it needs to prove itself. So a pullback from the 200 is okay. Now we need to start breaking back above it and break above this area 155.30 to really get something going. Watch the transports, because the transports start to change, and then we get some good price movement here and some good bullish action. That will definitely help equities. At least put into my thesis about having a little bit of a rally going into September. And then the diamonds, as you can see here, broke below. Really a nasty looking chart. A lot to do with Apple. The couple of key components really had some really bad earnings, and the YM just really real weak looking chart here, as you can see. And then lastly is the Qs. Still hovering above the 50. Technology has been doing quite well, better than a lot of the other asset classes here. So watching technology, see if the technology sector could actually hold up. That will definitely bode well for equities. Okay. Have a great weekend, all. Be safe out there today, and we will speak to you on Monday. Take care.